Hi, I'm Josh Steiner, Head of Financials here at Hedgeye Risk Management, and I also run the firm's housing research effort. So what we wanted to do today is take a look at the housing data, how it's been coming in over the recent period, and update you on our thesis. So since early this year, we've actually had a bearish call on housing in the U.S., and it's really been predicated on two things. One is the rate of change in price decelerating from what had been very strong levels over the course of 2013. And secondly, the idea that demand is falling across multiple categories within housing. So with that as a quick backdrop, let's take a look at some of the data. So the last three data points we've received on the demand side have all been negative. We got pending home sales for June, which showed that volume is down 1.1% month over month. Then we got new home sales data that showed that volume for new home sales is down 8% month over month. And most recently, we've gotten the Mortgage Bankers Association purchase applications data, which shows that 3Q to date, volume is actually tracking down 5% quarter over quarter here in the third quarter. So on the demand side, things are definitely going from bad to worse. No change there. Next thing we'll take a look at is on the pricing side. And here the data is also not particularly promising. So what we like to look at is the CoreLogic national home price indices. And what we've seen now is really for the fifth month in a row, the rate of year-over-year change in home prices nationally has been decelerating. So back as recently as February of this year, we were running at about 12% year-over-year price growth. As of the most recent data, which is a preliminary July estimate from CoreLogic, that's actually slowed now to 7%. So basically we've gone from 12% growth to 7% growth. And the trend we expect will be one that continues to show further deceleration over the course of the year. And when we look at housing stocks generally, they tend to correlate to that second derivative change in the rate of price change. So as that continues to get weaker over the course of the back half of the year, we would expect that the stocks that tether back to housing are going to be sideways to down as well. The final thing we'll take a look at quickly is what we call our Hedgeye Housing Compendium. And I know there's a ton of data on this page. The point isn't to try and look at all the numbers, but really what we're interested in is whether things are red or green. And they're red if they're sequentially worse, they're green if they're sequentially better. And just in looking at this data, most of what you see is red. And what I would say is that if we get existing home sales rolling over sequentially when they come out for July, which we think there's a pretty good chance because the pending data has actually been softening, then effectively this entire compendium is going to be red. In other words, every material data point in the housing complex is going to be showing negative progress. So anyway, that's the quick update on housing and our bearish view there. If you have any questions, feel free to reach out to me. I'm on Twitter. My handle is @HedgeyeFig. Thanks.